So welcome everyone. I'm Ray Zastoupil with First Line Compliance and also the chair of the Mortgage Quality and Compliance Committee this year. Today, this is our regularly scheduled webinars that we have on a monthly basis, most months anyway. And today we have the luck to hear about things on social media. So thanks for joining us. I want to first transition and introduce Jeff Flory. Jeff, you there?
I am. Thank you, Raymond. Hey, the compliance group is very proud to support the efforts of the California MBA and in particular to sponsor the Mortgage Quality and Compliance Committee this year. This committee is just one of the ways that Susan, Dustin, and the team are working very diligently to promote advocacy amongst its members, provide quality education and information to better inform our industry, and to help us all connect and collaborate. And we can probably expect that with the new administration, we'll need to be especially attentive to compliance and quality this year. For those not aware, the Compliance Group is a 20-year-old firm serving clients nationwide in 3 core areas: origination quality control as an outsourced solution, servicing QC to help proactively monitor and address servicing compliance, and compliance services, including file reviews and audit work like internal audit, AML, MERS, amongst others. Our mission is to create highly engaged partners by supporting their efforts in effectively managing their compliance and quality risks, and our team of highly knowledgeable, meticulously thorough, and passionate associates are focused on creating exceptional experiences with every interaction we have with our partners. And Ray, I'll turn it back to you. Thank you.
Thank you, Jeff. Thanks for your support and the compliance group support. We at CMBA can appreciates that, and of course it gives us our opportunity to be have webinars and other things as well. So we greatly appreciate it. Okay, so what I'd like to do next is, of course, we have a legislative update. And of course, we have our subject matter expert on that all the time for so many years, Pat Zenzola.
Thank you, Ray. What I'm going to do today is give you a quick update on where we're at in the legislative process, and then go over 3 bills that I think are would be of interest to the group. We just had the deadline for bill introductions occur last Friday, so we probably had upwards of 1,000 bills introduced in through last week, in addition to the approximately 1,500 that have been introduced to that point. So we're, I think, around 2,400 bills that have been introduced approximately, and we're going through all of those bills to determine the impact on the mortgage industry. The first bill I want to bring up today is SB 324, deals with commercial mail solicitations. And it would require that any company that sends one or more unsolicited commercial advertisements in a year to include information on those advertisements, including a toll-free number that can be used to opt out from or to cease receiving the emails. And it would, upon the company getting one of the requests to opt out, would have to make sure that the recipient is opted out of the advertisements, and then remove the person from any of the mailing addresses internally, and also with third parties that do that type of thing, advertisement for the entity. So I think this is going to be of interest. And the other interesting thing is the way commercial mail advertisement is defined. It's very general, so it potentially could include emails, not just kind of snail mail. The second bill I want to bring up today is SB 449, and this bill deals with climate risk assessment. And the way this thing would work at this point is it would say that any bank, state licensed bank, any corporation, credit union that stays licensed, finance lender, an insurer, real estate investment trust, even mortgage lenders that are state licensed would have to annually prepare a financial risk report and submit it to the Department of Financial Protection and Innovation. Essentially looking at disclosures of how your portfolio is related to any climate-related financial risk. And this would apply to these entities that have $100 million as far as holdings in at least up until 2025, and then after 2025, they would actually reduce it to $50 million in holdings. So very problematic, I think, for residential mortgage lenders. Not sure how this would work. We'll be, I think, very interested in that. And then the final bill that I wanted to mention is SB 531 Wachowski, that deals with debt buyer restrictions. Currently, this statute is only impacts charged off debt. And basically, if you have charged off debt that you're selling for collection purposes, there are all kinds of restrictions and notice requirements, et cetera, that would apply. Well, they're changing the definition of what would apply to not just charged off debt, but to any consumer debt that a creditor assigns for collection purposes. And that's a much broader definition. And at least initial feedback that we have is it wouldn't only affect, let's say, credit cards and automobile loans, but it would also affect residential mortgage loans. So, and by definition, servicers are assigned these loans for collection purposes. So it could be very problematic if, in fact, it would impact mortgage loans. So those are the three bills that I wanted to highlight today. We'll probably have many more as we sift through them for the next call. That's it as far as issues I wanted to bring up, Dustin.
All right. Thank you, Pat, for fighting the good fight. I think, people have to remember that the people here, the California Mortgage Bank Association does a great job representing the industry. And I think, Pat, your job is like a lot of compliance people. If nothing happens, nobody notices, but it was probably a lot of work to make sure nothing happens. So, I appreciate that.
Thank you, Ray, and I appreciate all your help and feedback on these issues. So thanks again.
Thank you. Very good. Then let's transition into our main event. I'd like to introduce our speakers of the day. It's Mike Zastoupil, Sales Solutions Specialist at Comergence Products at Black Knight. His past would include being risk managers at multiple companies, and as we talked about, Mike and a lot of people here as well. We've done the subprime days as well. So boy, do you know risk, Mike. Next, we also with Mike, we have Philip Yee, who's the Chief Marketing Officer at Plaza Home Mortgage. He's done the same thing in marketing at Ellie Mae, Wells Fargo, Bank of America, et cetera. So he's got a lot of experience in that. And again, with social media, that's the new one we got to figure out. I shouldn't say that. We've had it for a while, and still, I think we're trying to figure it out. So we're glad you gentlemen are here and to help us out. Thank you. So go ahead.
Well, good morning, everybody, and thank you for joining me today. As mentioned, my past is a lot of risk management with multiple areas within the mortgage industry, mostly on originations and dealing with loan officers. Today, we're going to talk about social media compliance and things that you need to do in your organization. What is your social media plan? Can we get the first slide up? So we're going to talk about what is social media at your institution. Discover the opportunities. What are the risks? What should you know? Underlying potential risks, social media compliance policies and procedures. Have you drafted them? A lot of people are relying upon the compliance group to put this together. They don't have a lot of background and experience with social media in a lot of cases. You need to understand what are the best practices out there. How do you automate social media today? Monitoring, audits, collaboration, publishing, and what resources are out there today? And of course, we're going to ask a Q&A at the end here today. So next slide. So discovering the opportunities. Social media today is grown and it continually modifies and changes. We joke around. I mean, obviously, by looking at me, I'm the old school guy that was doing mailers. That was my social media, postcards, smile and dial, and a lot of driving back in those days. So it's an extremely powerful business development tool today. And most of the top producing loan officers and top producing companies have really embraced social media and multiple platforms. So you need to have a robust social media strategy that includes branding, and Philip's going to touch on a lot of that today. Both at the corporate and loan officer level. What is the loan officer doing today for outreach? It needs to be personalized. It needs to be reaching out to clients, keeping your name out in front of them. So what are they doing? What are the future plans? What is the most efficient way to communicate social media today? And what is the value proposition? What is going to be a return on investment? Next slide. So what should you know? Well, there's a lot of things that you should know about social media and who's looking at you. We're going to touch on that a little bit, deeper here in the next couple slides. But the FFIEC is the biggest overview of your social media today at the federal level. But then the state regulators have really grown in what they require. There's a lot of unique state overlays as well. And you may have not really thought about this if you've got loan officers that are licensed in multiple states, but maybe they're only doing business in your California branch, but they're licensed in Arizona, Nevada, maybe Oregon, Washington, and so forth. You're going to be responsible for whatever those state overlays as well, because social media is public. It's crossing all the state borders. It's crossing even national borders. So, the FFIEC are required you maintain a social media risk management process. So what is your process? And I know the big challenge for your compliance team today, and I'm going to be a big advocate for them, is time and bandwidth. They need the people, they need the time to get these things resolved. Social media can't be something that you pick up and deal with when you've got a problem. It can't be just one of those fires that you put out. It's something you've got to constantly work on. Next slide. So what are the potential risks? Compliance and legal are the biggest ones. We touched on that, federal and state regulations. But also brand and reputational risk. We have lived this last year, 2020 and into 2021, with a huge amount of social media invasive in our lives, mostly because we're locked down. We're utilizing it for our news sources as well, and so are your loan officers. They're very much involved in political and social activism today. And how is that affecting your company's messaging? A lot of companies don't really think about this. They think about the company Facebook pages or the personal Facebook pages or branch pages that the company built. But a lot of your loan officers have identified themselves as LOs, working for your organization, trying to drive new business on their personal pages, Facebook, LinkedIn, Instagram, Twitter pages as well. So what else are they putting out there besides your content or information about getting loans? There's the confidentiality and privacy issues that you're going to deal with too. And honestly, we had a really good webinar earlier last month in January with CMBA about that. It really touched on a lot of the privacy issues, something you really need to be concerned about. And then, of course, information security and operational risk. These are all things that need to be touched on within your social media plan. Next slide. So again, who's watching? We kind of touched on this already. The CFPB is one of the bigger watchdogs out there. And then we've got, obviously, a lot of different things on the list here. And what are they looking for today? That's the big challenge. What are they looking at? A lot of state auditors are walking in today to your compliance team, and they're saying, I'd like to see a list of your loan officers for the state of California, and I'd like to know all their known social media sites. Are you prepared to do that? We've got attorneys looking at their sites to make sure that they're not stepping over the line. You might have a financial risk. We've had a couple companies in the state of California, for example, that have touched on some advertising issues with reverse mortgages, and they've had some extensive fines and restrictions placed on them. So and then you've got the consumer advocacy groups, which is something that's interesting. They kind of ebb and flow, and they're kind of on a rise again today. We've had lots of reports from across the country of consumer advocacy groups trying to catch you on what they consider exploitation in your advertising. So you really can't leave it to a loan officer to be an expert about this. Their expertise is about getting loans, getting things closed, and getting things funded. Next slide. So building your compliance policies. You need to do a risk management assessment right off the bat. And the first two points here are kind of hand in hand. Identify your most active LOs on social media. Honestly, mostly this can be done through some just Google and Bing searches. It's not that hard to do. You put in your loan officer's name, their affiliation with the company, maybe the loan officer, and you'll find a lot of sites. Now, one of the things that you should look for when you're evaluating this risk is, remember your loan officers have worked for other organizations before they came to you. They had different policies, different procedures. They may also have legacy sites that have not been shut down. That's a big challenge. We see this over and over again. They will have a Facebook page for, Monument Mortgage when they worked there, but now they work for you. And, there's people are still drawn to that. And what is the content on there? What was their policy? Are they meeting federal guidelines? You're gonna have some responsibility for that, even though it's legacy stuff. Define what your policy is. We've had a lot of banks, and I don't know if we have any banks and credit unions on here today, but banks and credit unions have traditionally shied away from social media. We want to use the company pages only, and I get that. I understand trying to mitigate risk, but you're falling behind the times. You're not getting your messaging out. You need to define what you're trying to accomplish and appoint a compliance manager that's specific for this product, this part of the process. The compliance manager that's handling your RESPA and everything else may be overwhelmed. Again, this goes back to not trying to put out forest fires, but have a consistent approach to your social media. Developing training for your loan officers is very important, but also more importantly is if you find problems, what do you have as a remediation process? This is something we hear about all the time from state and federal regulators that are coming in. They say, great, you caught something. What did you do to clean up or fix the problem? Did you have training? Did you have follow-up processes to make sure that these items have been corrected? Creation of reporting for executive overview. The executive team, the sales management team needs to understand what are your loan officers doing? What are the violations that are going on out there? I wish I could just say that things aren't happening that way, but we see that almost any loan officer might have 2 or 3 different violations. We'll talk about some common ones here in a few minutes. And then, stay on top of the regulation changes. That is something that's really critical, especially at the state level. Most of you are not just lending in California, right? So it's great that you know what's going on with California compliance, but as you go into other states, they have different regulations and overlays for social media. Next slide. So the risk management assessment, what is the reputational damage, inappropriate content, photos and videos? Now, I touched on a little things about reputational risk when it comes to social and political activism too, but most of us on Facebook, if you look at mine, it's probably very boring. You're gonna see pictures of the family, things that are going on in my kids and grandkids' lives. But, we have a lot of things that's inappropriate content. I'll share just a quick story with you. You guys have all heard the expression of making it rain, where they take a pile of money in their hand and they slide it off into thin air. We had a loan officer that had a really great month, and so there was a video that was taken of her making it rain in her office. That's not a really good messaging for your loan officers or your company, that they're making money or lots of money off of your consumers. So compliance violations, we're going to touch on the big ones here: TILA, RESPA, FTAC Act, SAFE Act, etc. But those are the big ones, and the ones that we see are fairly common things mostly. Things like their full name is not listed, NMLS ID. Some states require branch addresses. There's some other disclosure information. Those are very common ones that occur, and most of those could be addressed through training. Providing content to your loan officers and say, these are the things that you need to address because these are the states that you're lending in. And again, the big thing is the state regulations. The state overlays are the biggest pitfall right now. Everybody's focused on what's at the federal level, but you've got to look at what's at the state level. So regulatory fines are really a challenge, and prohibition from future advertising. As I mentioned, we know a couple of companies on the reverse mortgage side that have had big fines. They've had restrictions placed on them, and it's happened in other, California, those are just a couple of examples, but we see it across the United States right now. The fines not necessarily are very big, but restrictions on your social media and your social media messaging, as Philip's going to tell you, this is the world. This is how you're going to drive in new business. And again, creating your operational policies, meeting company policies and branding objectives. Those are really key. And again, Philip's going to touch on those branding objectives as well. Those are great tasks. Next. Again, we're going back to identify those most active loan officers on social media. There's 2 ways to identify those right off the bat. If you have a big company where you've got hundreds and hundreds and hundreds of loan officers, Start with your top producers and start with your lowest producers. They're the ones that are usually causing a little bit more of the havoc. The big producers, just because they're putting out a lot of social media content. Our information that we're seeing out there today is the top producing loan officers in the country right now are having the bigger social media presence. They are the ones that are getting the surveys and the evaluations to show they're doing great jobs. They're the ones that are getting content out that is not also just about mortgage lending, but informational topics that can, support that consumer in their everyday life. Perhaps it's just community involvement. And again, define that social media policy. Do you have your loan officers posting anything about your credit union or mortgage lending process? That's a big no-no. Consider your loan officers are already posting in LinkedIn or Facebook. It's happening. Even if your policy is today, no posting. What you're finding today is you go to LinkedIn, which is their private page. They're listed as a loan officer. Is their NMLS ID, is their company name properly displayed there? And they've already mentioned on Facebook that they're a loan officer and they work for, and so you're responsible for that content. Next slide. And again, let's go back to the point, that compliance manager. Now, the compliance manager, honestly would be mostly your compliance team that you're utilizing today. But there is a big crossover here, and that needs to be involved with your marketing team as well. Marketing can also help reinforce the compliance effort. Are they doing the right things on marketing and translating that information down to the loan officers and making sure they're following up on it? Be prepared that you're going to have a social media audit at some point or another in the near future. It's increasing. There was a mention earlier today under this administration that compliance is going to be king. It already is. It's increasing, and the amount of audits we're already seeing are stepping up. So implement a loan officer social media training. This could just be 5-minute informational lunch and learns. These could be 5 minutes at your national sales meetings. But be prepared to present content to make sure that they're understanding what they're posting today. Show them some examples of what not to do. Probably you'll find those in your own world. And then show them some good content as well. Give them some ideas to drive business in. Next slide. Developing a remediation process. Again, I touched on this. This is something every auditor is going to ask. What is your process to follow up on things that are being fixed? If you've already identified the issue, that's awesome. But what did you ask them to do to fix it? Did you ask them to correct their name? Did you ask them to even take down the post? We've seen quite a few posts recently where there's obviously recommendations to from a loan officer to a real estate agent on a listing, but sometimes there's an implication about, hey, to get this property, you got to come to me as a loan officer. Are you addressing those issues, and do you have a process to remediate those? What's your follow through? And create a schedule for your audits and reviews. We recommend best practices over here at Optimal Blue and Black Knight is that you do at least a detailed audit on your loan officers at minimum once a year, but you should have spot checking or monitoring on an ongoing basis as well. Again, those trouble things that pop up, especially with reputational risk, usually follow through the audit cracks. Next screen. Again, creation of reporting for the executive overview. You got an example of one of our screenshots up here, but frankly, they need to know what regulations are being violated and where are they coming from. And I guess you'll probably understand that the biggest offenders today are coming from Facebook and LinkedIn. But Twitter is not far behind, and there's more social media platforms. Philip and I had a conversation about this the other day. TikTok, MeWe, Parler. There's more social media platforms opening up every day, and your loan officers are definitely a part of it. So create an overview so you know what regulations need to be addressed. Create some overview so you know where the problems are coming from and you can address them directly. Next slide. Staying on top of regulation changes. We gave you a little screenshot here of all the different states out there, but every state, has some type of an overlay. Some of them are very easy, like, just loan officer's name and NMLS ID. That's very, very common. But as you can see, there's other states that have other regulations, and staying on top of them is a key challenge. There were some just recently, for example, Georgia had a couple of regulations that have been in effect for several years that have just been repealed. So maybe you've got overkill going on as well as new things that are coming up, especially at the start of a new calendar year. That's when a lot of regulations go into effect. Next slide. So what is the social media business case? Again, one of the stats that we're looking at here is current research shows 77% of ROI for social media technology investment and pickup in social usage. This is just a key stat here, but let me share something just much more direct to you today. 79% of people in the United States look at Facebook at the start of their day. That's a tremendous impact. They're not looking at your company website every day before they start their day. They're not looking at LinkedIn. They're not looking necessarily at Instagram and Twitter. They are looking at Facebook. So there's also a lot of benefits to social media opportunities here. Enhanced marketing and outreach is obviously a key here. Growth and profitability is definitely the key to this. One of the things that I'd like to share with people, some of the best hits that are going on out there today, is if your mortgage company is involved in any way, shape, or form with any type of community outreach, fundraisers for the library, backpacks for kids going back to school, the local food banks, these things are huge and include, like you're looking at today, a video. Videos are watched, photographs are looked at. Don't just post something with your company logo on there. Put a picture, put a face on your company, put a conversation forth in a video. Those get the biggest reactions and the biggest uptick. Next slide. So again, just to recover everything, social media best practices, establish a governance policy, policies and procedures, implementation of some type of an automation or process, monitoring and audits, key functionality, you got to do this. And most importantly is you have to remediate and train. So that's just a recap of what we just talked about here today. Next slide. So obviously I'm going to hand it over here to Philip Yee. I don't want to look at this handsome looking guy down here on the PowerPoint any longer. Philip, you want to fill in all those wonderful holes that I just left for us?
Hey, thanks a lot, Mike. That was fantastic. Even I learned a lot, and it's very comprehensive list there. So I'm going to talk about a little bit more about the marketing and branding side of social media. Next slide, please. And to reiterate what Mike has talked about, but one of the things I'm not sure a lot of companies know, but there's ADA compliance branding that's required. So for example, particularly in social media or any digital marketing or content, all social media marketing and content has to be ADA compliant. So there's actually something that you can find, there's a resource there with the ADA about color contrast, meaning that the contrast has to be 4.5 ratio or higher. So in the little illustration we got of actually the Plaza brand guide, you can see the green check marks are ADA compliant, but the black X marks are not. So, those are some of our brand colors, but you can see white text on an aqua background is not brand compliant, but it is brand compliant on that darker teal color or the gray color. And so these are things that you have to learn about, and there are resources out there to do so. Next slide. So there are different resources I just mentioned. One is digital.gov on guidance in terms of digital services, government, and you can learn about non-visual desktop access as well. But these are just 5 of the things that came from that site, actually, just about making sure that your contact information is available on your social media account page, making sure that your social content is available through more than one channel, providing links or contact information to the official social media support and accessibility teams, keeping your content simple, obviously, and learning the accessibility requirements, and periodically testing your content for accessibility. Next slide. So there are some vendors out there that actually specialize in ADA and compliance evaluating. and they can identify and remediate or help you remediate your web accessibility standards by looking at your digital content. So digital content, not just social media, but actually your corporate website, your company intranet portal for your employees, your newsletters that you're sending out, all that's digital marketing. So I know this topic is about social media, but deeper diving in the ADA compliance side, these are things to be aware of. There are a lot of vendors out there. User First is one, User Way, Level Access, DQ. Those are just some examples of websites to check out. You can do this by doing a typical internet search. Just some tips about social media. If you're a lender, as Mike said earlier, make sure that you display the company, corporate, and MLS number on there, as well as the equal housing lender logo or that statement. And just to mention, your loan officers or employees who have individual personal NMLS numbers, those have to be up there as well in their profile. Make sure you keep records of the content. From a compliance side, a lot of times actually you're held upon to report on topics that you posted about. So most, if not all states actually require that all the marketing and advertising content is retained for examination purposes. And so they're going to check to see if you have the NMLS number, the address, and some of the things that Mike talked about earlier. For images, you have to ensure that images have alternative text. So it's not just the image, but underneath it might say, if you're using a stock photo, for example, of a couple buying a house, it might say a couple standing in front of house. So those are things that be aware of. And if you have any video content that you're posting, whether it's on social media or your company intranet or even your corporate website, it requires closed captioning for the hearing impaired. Next slide. So what ADA compliance branding covers and what it doesn't. So basically anything that's online or digital marketing wise has to be ADA compliant. So some of those internal and external marketing categories are social media, websites, email marketing, such as newsletters or product notices to your clients, to prospects, anything that's a digital collateral or a digital rate sheets that you're sending out, presentations, training webinars, client portals that sometimes some lenders may have that are password protected, or company intranets. So generally speaking, physical or print marketing does not have to be ADA compliant, such as sort of conference exhibits, signage, banners, promotional giveaways. Not to drill down too much, but what happens in terms of branding is you can't sort of have two ways to brand. So typically our physical or print marketing is very similar to our ADA compliant branding as well, so that it's a more holistic brand. Next slide. Some other things to remember from the marketing side, just to make sure that your employees understand your company's social media guidelines, what they can and cannot do. Mike just talked about a whole litany and host of things that some of you may not be aware of, so that's definitely a good thing to have a checklist about. If I mentioned before, if your employee has a personal NMLS number, they have to put that on their individual profile header on LinkedIn or Facebook or wherever it might be. Your corporate social media profile is basically an extension of all the marketing that your company does. So it has to be brand consistent across the board in terms of not just the way it looks and feels, but the voice and tone of it. When in doubt, don't post it. That seems obvious. Something Mike talked about, monitoring your employees' personal profiles for content, because what they say can be considered representing your company's point of view. That's particularly noteworthy in terms of last year and the current social unrest and those kinds of topics that might be considered more controversial than or inconsistent with your company's position. add AD and compliance into your corporate brand guide, and basically think AD up front, not as an afterthought. It's from the AD compliance side, it's really there to broaden the reach and engagement with everybody in the community. So those who are hearing or visually impaired or otherwise. So it's just something to plan and think of up front, and not always think of it as a reactive thing that you're going to have to do to comply. Next slide. And that's me and my contact information. Back to you, Raymond.
All right. Well, thank you very much. I think I've done this business a long time, and sometimes I hearken to the days and enjoy the fact that in 2006 things were easier. We had no TRID and we had no social media. So and now we've got both and lots more than that. So thank you both, gentlemen, for giving us that information, giving us some framework. We greatly appreciate it. At this point, I think I would like to see if there's any questions out there. Dustin, are you out there?
Yeah. So thanks again, Mike and Philip. Great presentation. And if anyone out there in the audience has questions for either Mike or Philip, this is the way that you can ask those now. You can go to the questions dialog box and type those in, and then we will do our best to answer them in the time we've got remaining. So I do have a question here. I think this one is likely for Philip, but you can probably either one of you can take this. The question is, what are the speaker's thoughts on, quote, private social media pages that the MLOs may advertise on?
So I'll start off, and Mike, you I'm sure have a lot to say about that, but it's going to be very challenging for companies and management, but you really have to find a way to monitor and audit and remediate any content issues. You start off by being more proactive, and as Mike said, have a guide and audit process and all of those things in check, but it has to be done. Mike?
Yeah, Philip, thank you. The private Facebook pages, this is probably the biggest area of conversation, right? Or Instagram. When they post something on there that's, you know, maybe controversial, that's fine if they're not connected with you in any way, shape, or form. But the challenge is when they identify themselves in the about information, that they're a loan officer, that they work for, you know, the greatest FHA lender, XYZ Mortgage. You know, they've crossed a line there for reputational risk for you. Now, while, you know, the conversation is difficult, you can still have that conversation with your LOs that, hey, I appreciate you've got personal opinions, but I do need you to separate them from your business side. We're requesting that you no longer identify on your Facebook page that you're a loan officer for XYZ Mortgage. But again, you are responsible for any content on those pages from a regulatory basis as well. So if they're posting on their personal Facebook page, they've identified they work for XYZ Mortgage, you're responsible for content. And then again, the reputational risk is huge.
Got it. Thanks, guys. I think this next one, I'm really interested in your thoughts on this next one. This is a great question. What's your opinion on posting of memes? I've heard there may be some copyright laws trying to get passed for the use of the images.
Philip, I don't know if you got any feedback on that one. I've heard some issues with copyright issues. I have not heard about anybody, you know, extensively take this to, you know, to court or press it further than, you know, having conversation about it. I don't have any examples I can cite at this point, whether it's going to be a real problem or not. That'll be a good follow-up for future conversation for the MBA.
I would say just as a general intellectual property perspective in terms of branding, people are not allowed to use it if you don't have formal permission from the owner of content. Technically, you're not supposed to use it. Raymond?
All right, so we've got a couple more questions coming in here. Question about what about using a language other than English in their posts?
Yeah, Philip, why don't I take this one for you, because that is something we do manage in our system today too. Yeah, if they're posted in a foreign language, there's still, you still have the same issues and responsibilities. We see that especially here in the Southwest, being part of California, that we see a lot of people posting in Spanish language. So having a process in place to not only translate the pages for audits and also monitoring in other languages, you're responsible for it. You have to do it. And it's not just Spanish. I mean, that I just picked on the largest language, probably variants there, but we have companies that I've been dealing with on the East Coast that have people that are poaching stuff in Portuguese, and we have Vietnamese and Korean and Mandarin posts as well. You're going to be responsible for the content, so you got to translate the stuff.
All right, next question. If a loan officer writes an ad on their own LinkedIn page to get business, do we need to have compliance approve those?
So my short answer is yes. So my short answer is yes, because the individual is not promoting their own product. If they're promoting an ad, doing an ad to promote a product of the company, then it has to be compliant and approved legally. Mike?
Yeah, I agree with Philip. The only exception I might offer for you there is if you have a strong monitoring program where you're doing searches based on trigger words, where you can search for things like APR, rate, no fees, no points, things like that, where you can monitor for trigger words, then you really have to have this stuff either approved or you've got to have a really, really strong training program. I would lean towards approval.
Gotcha. All right, next question. To what extent do self-reporting obligations apply to social media compliance violations?
Mike?
Yeah, I'm trying to figure out the best way to address that question. For as far as self-reporting goes, honestly, it depends on the size of the organization whether you're going to want to do self-reporting on this or not. My biggest challenge and point that I made there is making sure that you've got time to really do the research and to do the follow-up and actually have a remediation process. Or if you've gotten so big, do you need to bring in additional staff, or do you need to consider outsourcing?
All right. Philip, do you have anything to add on that one?
No, I think better safe than sorry is my attitude about marketing and branding content. You want to be ahead of things and not be on the receiving end of problems that may be developing or exist out there. And you can't say to a regulatory body or somebody, quote, you didn't know, or feign ignorance. That doesn't fly. So it's better to get ahead of it.
Philip, let me just add to that as well. When a regulator does come in and they do have findings, and they will have findings, you're usually limited to amount of time to respond to those findings. How big you're going to get because you're either not monitoring correctly or you're doing a good job. It's really going to base. We've had companies where they'll literally have hundreds and hundreds of social media findings. You've got 30 days to get them resolved. How do you do that if you've got a manual process and you're not paying attention? So build a process, stick to it. It's part of your everyday life. It isn't something you think about doing or get to it. It's got to become part of the daily function of your organization.
All right. Well, unless anyone has a last minute question here, Raymond, I think we're just about out of questions. So unless someone pops in a question here while I'm still talking, I'm going to hand it off to you. to close us out and remind everyone about the next webinar.
Okay, thank you, Dustin. Actually, I have a question, if you don't mind, as well, for Mike and Philip. And because of your travels in marketing and, of course, social media, the importance of having a social media policy in place, I'm sure, is critical. But I think sometimes what people struggle with is how bold is it? In other words, you shall never post anything personally on your Facebook. Does that work? I mean, obviously, size of company, et cetera, but what have you seen in your travels as to what's the right way to articulate this, that it's livable, it's realistic, but it still hedges risk?
Phil, let me hit that one first. One of the things that I've seen, it doesn't matter the size of the organization, when they try to restrict social media, they tend to be losing business, and we've gone through cycles on how we reach clients. Social media is what it is today. It is the mailer, it's the drive time radio ad of the 70s. Today's social media. So you have to allow it to happen. You can't restrict it. If you do, you're going to lose market share. You're going to lose clients to the people that are actively pursuing social media. Philip, I think you probably have some, similar take.
Yes, so I agree, but my general approach is better safe than sorry. So it's challenging to get employees on the same page with your company's social media guidelines, but you just have to do it. And so you have to have the guidelines, have training around it so employees understand how to translate it and interpret it. Then you have to have an audit process, as Mike talked about, to say, hey, you're pushing the edge, or you violated our company social media guidelines, and have that in the process. So there's, I guess what I would just say is just because other companies are doing it, or it seems logically okay to do, will not pass muster in a regulatory audit. So it's just a new order of what we have to deal with. It's a new medium, and there are rules around that. I've been in companies where we have been fined upwards from $100,000 and more because a loan officer was not in compliance with advertising, promoting a product, and then we're on notice for the next 10 years. So those kinds of lessons are very painful, and you want to preempt those. Raymond?
Very good, thank you. So very helpful. Dustin, any last minute questions you see there?
Nope, nothing on my end. I think you're good to go to close this out.
All right, well, very good. Thank you, gentlemen, for the presentation. Great information and great support. Thank you for everybody for attending. We say we pretty much do these monthly. The next one, as you see on the screen, March 25th at 11 o'clock, and we're going to talk about, I guess, the new thing in town, ERLA. And by the way, it's not new. It was just, kicking down the can, and finally it's actually popping now, right? So we really have to work on ERLA, and we figure this will be a time where we get feedback as to ERLA's been in now for 3 weeks. How lucky did we feel? So we encourage you to attend that and take it from there. So very good. Thank you, everybody, for your time, and hope to see you then next month.
Thanks for having me.
Thank you.